Welcome to Markets Now. I'm Michelle Rook with Matt Bennett, agmarket.net. Grains ending steady to a little bit better on Tuesday with cattle to the plus side scoring new contract highs and hogs mixed. All right, let's start off talking about the grain market. First of all, corn and soybeans saw a little early pressure, but came back pretty nicely, pretty resilient there. So do you think that's just all squaring up ahead of the reports coming up here on Friday?
Yeah, I kind of think that that's what we're looking at. I mean, you look and see what the overnight markets did, and of course, corn was getting hammered, and beans were down double digits for a while. People say, "Well, what's going on there? Does that mean they're getting more rain in Argentina, or the forecast is changing?" Really, not a whole lot had changed here over the last 12 hours. Essentially, you were looking at the commitment of traders report, 50,000 plus longs last week added for traders. What did that do? I mean, you're over 200,000 long. I think a lot of people are taking a look at that and say, yeah, I mean, certainly had a lot of good usage in this first quarter. We're going to find out on Friday just how much. No doubt exports have been good. Ethanol grind's been solid. But at the same time, you're still talking a 1.6, 1.7, even for the most bullish people down there around 1.6. You're not going to run out of corn. And so you've got this huge long. And I think it spooks some traders just a little bit, probably a little profit taking, and then you turn around and you ask yourself, where are you going the rest of the week? Well, you're probably going to get ready. Like you said, position squaring, folks not wanting to get too carried away ahead of what is most of the time the most volatile report of the year.
Do you see any farmers selling though on these rallies here, Matt, or what are farmers doing right now?
Yeah, there's no doubt above 450, we've seen a fair amount of this pick up. And I mean, to be fair about it, basis is held in there pretty good for most people. With that being the case, it's a bit of a surprise, especially as January contracts become available for some of these end users. So a lot of times, you get in the middle of the month of December, as was this year, some of those January contracts get pulled forward. So basis doesn't have to get pushed too much. Now, we're not seeing any basis improvements necessarily, but we're not seeing the thing widen out like you would maybe expect. We tried forever to get through 450, to get through the 200-day moving average, and we finally did. This week it kind of looks like that 200-day moving average has been a little bit of support. So you've got to hope something like that holds. But again, all bets are off whenever you get into a report like Fridays.
Right. And yet we can't get and close above the March 460 level. That seems to be kind of another area of resistance. So what would it take in the reports on Friday for us to clear that mark? What's priced in here? 1.6, 1.5, what ending stocks number do you think we're trading?
Yeah, I mean, I think that we're trading a sub 1.7. I really do. I mean, I think most people in and around the marketplace are looking, at the corn yield as maybe being a bit rich still. It's a huge crop, Michelle. You know that. I know that. 183.1, though, would certainly be over 4 bushel better than anything we've ever seen. And so, could we go down to actually over 5 bushel better than anything we've ever seen? Could we go down to a 182? I mean, we predicted 182.2 for this report. Talking to a lot of the growers that we did, I mean, yes, it was still a big crop, but it's no secret that a ton of folks were harvesting 11 and 12% corn, especially in the Western Corn Belt. And you've got to think that some of those loss of pounds, if you will, added up over the long haul. So dry August definitely robbed more bushels, I think, than most people felt like. So truly handicapping, a crop that is easily the biggest we've ever seen is a tough thing to do. And we still feel like the USDA could drop that down. So if they do drop down, then maybe you get carry out down to closer to 1.6 or even below. That would be friendly. That would be supportive. And I think you could see a little bit more of a push there. But at the same time, we have to be realistic that not only stocks, but stocks to use ratio are still considered quite ample here in the U.S.
Do you think USDA needs to increase demand a little bit more?
That's a tough call. I mean, I feel like they shot a pretty big shot there in December. We typically
Yeah.
don't see 200 million bushel increase in demand. We got it in December. And so could there be additional increases? Possibly. I think that it would go hand in hand, if you will. And I know supposedly it's two different departments, but quarterly stocks, if it comes in with a disappearance a little better than expected, absolutely. Maybe you could go ahead and bump up corn grind just a little bit. I struggle to think that we're going to increase, for instance, feed usage. I mean, wheat's awful cheap and wheat works, I think, into rations, especially if you would take this corn market up much higher. So for me, I really struggle to think that we're going to increase demand a whole lot from here. It would be nice, but I guess I wouldn't be betting money on it right now.
Do we get any demand adjustments on soybeans in the report, or will it all be about South America?
Yeah, I mean, I think that that's what most of it's going to be about. And I do think that the bean yield could also come down. I mean, once again, you get into that discussion of, so what's the lowest percentage moisture that any of us saw this fall? I saw a 6.8 that a guy sent me a picture of. There were some awfully dry beans harvested this last fall. I still think you robbed a few more bushels or pounds, if you will. Total production's got to come down maybe just a little bit. At least that's what we're banking on. I mean, we're not thinking a bushel or anything like that. But right now, we're at that 51.1 level. And I think it's altogether reasonable to think that that would happen. Now, we didn't touch demand. We still think we're going to be safely above 400 million bushels, which is still, it's plenty of beans. You look over at the world, though, what's the USDA going to do? It's awfully early to be making big adjustments. We know in the past, whenever there's been horrible weather in South America, they've slow played any sort of adjustments in total production down there, and so I can't imagine they do much. I could maybe see them increasing Brazil 1 million tons, but overall, you've got to remember that this world balance sheet looks like it's going to show the most stocks we've ever seen, and potentially the most stocks to use ratio we've ever seen as well.
But that being said, are you surprised we've been able to hover around that $10 mark? And will the funds continue to cover some of these shorts here? Is that the only reason we've stayed around that level?
Yeah, I feel like it's got a lot to do with it. I mean, clearly the bean meal market busted out of this doldrum that it had been in for a long time. We were trading COVID lows, and the bean meal market finally got the thing back over $300, kind of hovered around here. But all that was entirely due to the fact that Argentina trended warmer and drier, and forecasts, of course, supported that, that might be a trend that continues. And so at this stage of the game, without Argentine inclement weather, Michelle, I struggle to think that this bean market will hold together. I mean, to answer the question, I do think funds certainly have been in there buying some of their shorts back, not wanting to get caught on the wrong side of it, because there's a big difference between trading South American weather in December and then trading it in late January. So if you're on the wrong side of it, and you're hot and dry in Argentina in late January, there's no doubt that the market's going to be paying very close attention. But I think as a grower, we've got to be very cognizant of the kind of rally that we've already received, and at least take a strong look at protecting some of this, because some of these rallies, in our opinion, should at least be respected and sold.
Good point. So the wheat market just a little higher. Is it all just about fund short covering here? It doesn't feel like the global or even US production concerns, if we have any, have gotten any traction.
No, they haven't. I think the thing that's been most surprising to some of us, is that some of the estimates out of Russia have certainly raised eyebrows, but the trade hasn't raised an eyebrow from it. I mean, there's
No.
no doubt if Russia is your number one exporter, if they have as poor a crop as what is they're suggesting they might have, it's certainly going to work into this wheat market at some point. But by all means, right now, wheat's just dead in a doornail. And so I think a lot of it's got to do with this time of year. Typically, wheat isn't much of a leader. You don't see wheat do a whole lot in here. And I think right now, again, some of these folks are saying, hey, we'll go ahead and cover some of these shorts just in case this Russian wheat situation develops. Because if it does, I don't think there's any doubt that the market won't pay attention to it.
And Matt, new contract highs in both live and feeder cattle futures here today, chasing that record cash trade that we saw from this last week. Can we keep going here? Do you think 200 is in the cards or not?
It's a tough call, Michelle. I mean, I was a $200 cattle guy for quite some time. I think the thing that concerns me is that the funds have pushed and pushed and held onto this long position. They continue to come in here and buy cattle. I'm just concerned that at some point they're going to run out of enthusiasm. I'm not bearish cattle. I think fundamentally you still got a really good story. With these Mexican cattle coming in across the border in the next couple 3 weeks, which is what we were told here this afternoon. I've got to think that a person wants to be a little bit gun shy of being bullish whenever we're pushing all-time highs as far as fats are concerned. So definitely a cash-led market for sure at this point. Are we going to go ahead and try to get convergence there? I think that's the big question at this stage of the game, though. I think if I was a cattle feeder and I wanted to stay bullish, there's nothing wrong with that. It's just a matter of, do I want to do so without some sort of protection under me? Because we've seen the cattle market before drop to $20, $30 pretty rapidly. I'm not saying that that'll happen here, but if it did, I think we'd be kicking ourselves in the rear end for the next several months.
Yeah, I think the funds are record long in the feeder market, and boy, they don't get in one day and they don't get out in one day either, do they?
No, they don't. They don't. But I do think when the ball starts rolling, sometimes it's like a snowball in our part of the world. We got
Yeah.
a big snow here this week. It just keeps building and it can go pretty quick once it goes.
All right. Thanks so much, Matt Bennett with agmarket.net. That is Markets Now.